AI stocks are melting up in the US, but here's the real story no one is talking about. Australia has its own AI boom underway, and most investors are completely missing it. Today we're breaking down which ASX stocks are flying under the radar and are perfectly positioned to profit, even as headlines scream about an AI bubble. With decades of real-world experience and regularly called on by Australian media, we're the team behind Australia's leading accredited share trading education. And today we're giving you insights you won't find anywhere else. I'm Philip Tortevsky, and joining me is Wealth Within analyst Pedro Banales. Good evening, mate.
Good evening, Phil. Great to be back with you.
Good to have you back in the flesh. Obviously, we're going to cover off AI. It's big topic that has been all over headlines today, so stay tuned for that. Now, getting straight into it, before we show you some amazing opportunities, let's address the AI bubble headlines all over the world right now. Famous big short investor Michael Burry even put a $1.5 billion bet against US giants Nvidia and Palantir recently. So what are you making of this AI bubble? Pedro, I'll go to you. Obviously, there is talk. There are big bets against it from the famous big short investor. Is there an AI bubble out there in the US?
Well, in the US, possibly. I mean, you've got 8 mega caps there that make up 40% of the market. So that definitely does scream a little bit of a bubble territory. And if all the money's flowing into just those 8 stocks, and if we do start to see them slow down, then of course the whole house could come crashing down. But that's not necessarily the case here in Australia. I mean, our tech sector isn't as big, and we do have a few micro players that are bound to take off.
Yeah, and I wanted to get into that point because obviously in Australia, you said, as you rightfully mentioned, it's so concentrated out in the US, the investment. And when you talk specifically what is a bubble, well, it's a concentration, lofty valuations, money pouring into this one asset class, huge, optimism, euphoric type speculation. Maybe in the US, yes, but in Australia, like you said, it's much more broad. And the Aussies are more users of AI as opposed to producers of AI like the US are as well. So let's get and hold on to those thoughts and get into our first stocks out there. Now, the first one we've got is AIM. Now, this is AI media company. Pedro, obviously this one is a translation and media services, AI-enabled captioning. So it's got to do with languaging to some degree. I know they work a lot in the broadcasting scene. There are other competitors out there that are more government style, but this one is broadcasting. When you look at the chart of AI media technologies, I mean, what are you seeing here? Because to me, I'll get into my thoughts in a second, but it looks quite good.
Yeah, I can tell you're liking it. Well, look, this is a classic consolidation and a breakout pattern right here. Without getting into the cracks of things, too detailed, we have seen the stock, basically fly from the August 2024. And what's interesting is that this was actually one of the presenters. This stock actually was presented in one of the microcap conferences back here in Melbourne, and I believe it was around this area here where they were presenting. So we have seen a huge rise there of around. If I can get that price percentage from that level there, it's 100%. So obviously it was going to have a little bit of a sell-off, but we have seen it come back to these levels, a retest, which we like to see, and then now it's gone back up vertically, retesting these highs here of around that 9 cent.
Well, let me ask you this, because a lot of people would be looking at this chart, right, and they'd be saying, okay, the stock's gone up. Let's just say if I bring up the price percentage tool, where are we? The stock's gone up around 70, 80 odd % off those lows, almost 90 actually. When you're looking at this type of opportunity, and I want to get your thoughts on this specifically from the point of view of looking at this like a trader looking for profit, not so much trying to buy a story when it comes to AI. Because for me, it doesn't matter whether the story is bubble, it doesn't matter whether the story is whatever it may be.
Yeah.
When you're looking at stocks specifically and when you're looking at trading, if we can go back to that chart, please, it is really all to do with the risk reward scenario and how you're able to structure that to identify what is my risk when I get into this stock. Is it worth my risk at the moment? And what's the profit potential from here? Because it doesn't matter what's happened back here. Right now you're dealing with this scenario. The stock's up 90%. And is there an opportunity today? So that is the question I pose to you, because for me, when I look at this opportunity, the answer lies in how well are you versed in understanding structure around the trade, how long is the time frame that you're going to hold the stock?
Yeah.
And what's your intention with it all? So, I mean, for you, when you look at that right now, do you see an opportunity today for traders to get involved, or is this a specific type of opportunity, and what skills are required from potentially the technical lens to be able to make this work?
Yeah, it does. Yeah, a bit of a lot in that question, and
Yeah, sorry,
there's a lot of tick boxes that need to be ticked off.
But it's important, right?
It is, definitely, and that's exactly why we teach from the module 1 in our course. We do teach the money management, and then we get into the technicals, because first is your defense strategy. You need to be able to hold on to your capital, and then your attack strategy, which is your technical analysis. So on the chart here, I think we better go to the weekly chart to really outline what's going on. And what I do like about this, I mean, usually I would say that up around these levels, when it does retest these highs, there's a bit of danger. But I actually do quite like this pattern that's unfolding here. Price is staying up. It's actually, we're getting a lot of price agreements around that 90-cent level. So I would say that any breakout above these highs here of around that dollar level, and I'll just put out a horizontal line there just to mark it out, and look how beautifully it has bounced off that. Price is everything. You talk about fundamentals and the story, and we're always saying that the price will tell you where it wants to go. And basically, if it does trade above that 95 cents, I would say that it's quite bullish. So good for a short-term or medium-term proposition. I like them both. There is a bit of congestion, I would say, around this zone here. So that's around that $1.10 that it needs to get through. It might hit some resistance around there. But I think that if it does break above that level, it's going to be doing it with renewed strength. We've already had that retest of the bottom. Sellers aren't willing to sell lower than that. Buyers are happy to pick it up at that level, and they're wanting to push it up even further. So I do like it. I think it's good for a short to medium term proposition.
Yeah, and I think the key word there is short to medium term. If I go on that chart and have a look, for me, right now it's at one of those line in the sand type moments. I mean, it's always nice, like you said, when a stock, it's got two options once it hits a significant high like it did back in these times. It's either fall away or hold. Yeah. And right now the hold is what is occurring, but I still think, given the nature of this type of pullback following such a strong rise, that there is always the heightened risk that it comes and just ticks up above that 90-cent level or dollar level for them to fall in line with, I guess, the more sustainable rate of rise, which is somewhere for me along this type of gradient. So I think, a pullback to around that 74 cents would be ideal more for that medium-term opportunity.
Absolutely.
For a short-term opportunity, I like it if it can close above that 94-cent level, because it struggled in the past. And, there'd be a lot of traders looking at this going, well, as soon as it ticks up above this week's high, I'm going to get in. And whilst it may break through, potentially, it may also not, going by history. So you might get stuck in that limbo of like, all right, well, I'm looking at this scenario with potential for the stock to get to right there at worst case scenario, and I'm holding risk of around 12 to 13%, which is double. So maybe the safer option is above that 95, 96 cent level for the short-term play. But nevertheless, when you zoom out on this monthly chart and look at what is happening big picture, there's been a real definite change and in the nature of trend with this, because we are now following that huge contraction. Typical textbook, we teach this so much, guys, and it is evident in so many stocks that are, and if you know what this means, the way stocks base out and formulate these phases, it lets you, I guess, work that white space and, play the projections in terms of how far the stock has got left, because that's the other important bit. There's no use buying. If you can't answer today, where's this going to? Yeah, you're playing half blind, because that answers, what potential you have. So I think it's beautifully in expansion, had a decent pullback, held where the buying is. Now we're breaking out into the next expansion. It's all about getting the structure and the timing right in terms of the trade relative to where it is today, which seems to be short-term for now. But next up, we have Pureprofile Limited. Now, this is another stock in the AI space. Actually, Pedro, you did a bit of research on this one. They're kicking goals in terms of the company performing on a company level, if you will, earnings-wise and all that kind of stuff. Yep. And when you look at the share price, it still looks very, very early. So this, I'm going to say, might be my pick for a bit of a Christmas special. But anyway, I'm not going to say anything more than that. It may not be. It's still got a lot to prove, but
Oh
It's
yeah,
interesting.
oh the pattern looks great, and the fundamentals are lining up as well. So I might join you in that Christmas package
If it
myself.
doesn't work out, it's Pedro's fault.
Yeah, that's right. Well, there you go, late to the party.
Nah, it's-
So yeah, I mean they've been kicking goals. They've been having record quarterly sales. Their revenue is increasing. You know, you can look that up. It's publicly available information, and the chart is showing a pattern that we've seen time and time again. And we have shown this same pattern here on the show, and we've seen stocks 10x after that. So, you know, I'll just leave that there. There are ways to confirm this pattern. It's not just, you know, willy-nilly just seeing, you know, prices trading sideways or doing a certain thing. There are certain things that need to be confirmed, and there's a structure that needs to be followed.
Yeah, I mean, elaborate on that a little bit more, because you know we do see people that come to us on, especially watching this show. They initially it's like they'll look at us drawing a few lines and think, oh, this is easy. I'm just replicating that. But what they're not seeing is us, the stuff that we're not showing on the chart, the stuff that we're using to confirm,
Exactly.
the stuff that we're seeing to overlay the combination of tools to identify that as an opportunity. Obviously, we can't show everything, but it's not as simple as just saying, okay, this looks like a pattern to me right now, and that's it. There's a lot of context that goes into it. So I think that's what you're getting at, right?
Yeah. I mean, and we get students coming to us and they're talking about cup and handle patterns and all these things that are publicly available, but they don't necessarily tell you how to confirm it. How can you replicate that pattern? It's not just a matter of looking at it saying, oh yeah, it kind of looks like a rabbit. Well, you know, it must be a rabbit.
Yeah.
So basically this pattern, and obviously we're not going to teach exactly what's going on, but you can see the structure here, how, you know, we're seeing this price consolidation, and all we have to say is that if there is a breakout, and I would say, I'll draw a line in the sand here just to give it a little bit of value there. I would say that 50 or 5 cents, any break above that 5 cents on strong volume as well. We have seen volume come into this consolidation, you know, before it started to trade sideways. So that's another telltale sign. If we start to see price breaking out, oh boy, I mean, this has a lot to run. At the very least, it has up to that 8 cent level already. So that represents, in terms of you know, price percentage gains, that's already 75%. So that's why this is looking like such a good proposition, because it's also a good risk to reward ratio, right?
Yeah.
You know, you're not leaving too much for chance here. Like you know, you've got possibly a line there at the you know, around that 3 cent level, that you could say, all right, well, if it trades below that, then it's probably not going to shoot the lights out. But you know, that's a nice healthy range, and you could just keep an eye on this, trade it, and then, you know, you could even be in this for the long term. I mean, it's in a segment that is bound to grow. There's always going to be a need for this. The data that goes around this for consumers and what their patterns are like, you know, businesses are willing to pay big money for that. So that's the story behind it as well.
Yeah, and they've got some serious IP. I mean, it's not like they're not getting their third party provider data. They've got the IP, and I mean, look into the company if you want to get a good insight in what they're doing. But you know, like the AI field, and I just want to touch on that point as well while we're looking through the chart, is the fact that, you know, if you go back to the .com, people spoke about the you know, the .com crash and how it was, you know, the internet and all that kind of stuff, but what they failed to mention is that the internet survived. And it wasn't an internet problem, it was a company problem, specific problem. What came from that was stocks like Amazon that you know, now are today's leaders. But what I'm getting at is, when you hear talks of AI bubble, it's not necessarily meaning that AI is going to die. It's the companies with these lofty valuations, some that are not great companies, not well performers, that they'll fail to the wayside. But what you will find, especially when you look at a company like this, if it is going to continue and do the real deal, if we go back to that chart, that, you know, the AI will survive, and the ones that know how to use it or implement it in their business will thrive. So that's the point in terms of what you're making. Even though there is a bubble, the AI will survive that. So when you look at this chart here, I think it's very, very, very positive in terms of what we're seeing right now. The only thing I'll add is, when we're talking about liquidity, just be mindful that it's probably not the most liquid stock out there. You can see by the nature of these bars. So if you're thinking of, you know, you need to consider what type of position size you're looking at and all that kind of stuff to be able to navigate this kind of stock safely. because you could get caught up, given it is not such a liquid stock like something in the top 50 or top 100. But
basically, don't put your lunch money in it, right?
Oh well, lunch money is maybe all right, but not your
not your life savings.
Well, look, depending on who you are, some people have more lunch money than others. But the most important thing is that level there. I think also 8 or 8.5 cents. But confirmation, confirmation is what's going to give you the key. And confirmation, if you don't know how to understand confirmation or read confirmation, so you're not stuck in a sideways range, so you're not guessing when that breakout's going to be, please go and visit our website and have a look at some of our trading courses out there, wealthwithin.com.au. That helps alleviate a lot of the questioning in terms of when to get in and when to get out, which are the two most important things. Now, if you want an introduction to the things we're teaching, please go and check this book out. It's How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. The link is in the comments section below. We're back. We're stocked up with the book now, so please order it and you will receive it. Now, moving on, we have Artryra Limited, and I wanted to bring this one up because specifically for a reason, and that is if we go to the chart, Pedro, I want to remind you, and I'm doing a little bit of gloating today, but hey, why not?
Yeah.
We did an AI show back in June, I believe. So please go and check out that show. It's on our YouTube channel. And we were looking at this stock here during that time through there, which was June 2025. And the reason I bring it up, because the way it's unfolding, and if you know how to read these types of patterns, they unfold in the market time and time again on stock after stock. Maybe something there. I don't know. You can have a think on that. But look what followed. And it's not to say that there was an expectation that it was going to run up that much, but the expectation was that it was likely to move. Everything about this type of unfolding was saying the market was getting ready to expand. And so that's the beautiful thing about technical analysis, when you're able to find the right timing of these moves. You're not getting in there because you believe the story. You're not buying there because you think it's relatively new and exciting. You're not buying there because it's cheap, because you'd be sitting there for a year and a half with the stock doing nothing. You're not buying near these lows. You're getting in at the moment where price is confirming and ready to expand, and you're seeing it happen in real time. That's the power of technical analysis and the things we teach here at Wealth Within. But for me right now, I wanted to bring that up. Obviously, this one's in AI-driven imaging diagnostics platform for coronary artery disease. Another very hot area of AI. I think healthcare, health and AI, where they're crossing over is... And there's a lot of companies in Australia that are, getting involved with AI when it comes to the health side. They're the ones that are taking off. So I think there's a big opportunity. If you're not looking in that space, go and check it out. But now, is there an ample opportunity to get into this stock? I'm going to say not yet. If I'm talking big picture, and what goes up must come down. We've seen it with a lot of stocks. So I would be looking at something of a more sustainable rate of rise. If this stock were to find, a bit of a base around 250, maybe if it could ever get down to that $2 level, it'd be way more comfortable for a more medium-term type opportunity. Right now, anything moving through here is short-term. And I don't, neglect the fact that we might be setting up for another short-term run-up. So it's all about timing right now. I love that the volumes come in. I mean, you could monitor this stock even tighter on the rate of rise that it's unfolding at right now, which is something like this. So it may lend itself to an opportunity at these levels, but hey, you got to be careful in terms of how you structure it, how much you want to expect out of it, and timing of when you get into it will be everything in terms of whether you're going to walk away with something or with nothing. But right now it looks okay. There's support at these levels from $3 last week. Found buying at $3, closed at $3.40. Again, sellers tried at $3. That was 2 weeks ago. Sellers tried again. This is this week. Sellers have tried again this week to take it down to $3, and we're back up to that $3.40 level almost immediately. So watch $3.40 closely, because there might be a short-term opportunity on the horizon. Any thoughts, mate? Yeah,
it's holding up quite nicely above that accelerated trend line that you've drawn there. So I don't discount either the fact that it could actually keep running up. And look, if you don't get it on the next run, well, don't beat yourself up. It just wasn't for you. You always have to take the lower risk trade, and really the lower risk trade would have been back here. And that's why we always have a look and get excited around these types of patterns, because we've shown them time and time again that they do work. Now, of course, the certain AI segments are a little bit overheated, and I think that's where Borry is kind of playing at. I think he's playing for a more short to medium term downturn in the AI market. I don't think that he thinks that it's a full-blown bubble, but he's willing to bet on a bit of a short-term sell-off. And that's what we could be seeing here with Artryra. It could be it's time for a bit of a sell-off. We could be coming back down to maybe that $2 level where there was a lot of price agreement in the past. But I mean, it could still be very well long-term bullish in the future. So for a short-term trader, there could be a possible, trade up to that $4, even that $5 level there if you find a level. Obviously, we teach how to project levels to the right-hand side of the chart, because that's where you make your money, not over here where prices already run. But we do project price out and have our price targets that we can work towards. So yep, I'd be keeping an eye on this one, but I think I'll stick to the previous one for our Christmas presents. All
right, well there you go, some early Christmas presents. Now, if you want more hot stock tips, check out our video, top 3 ASX stocks to boom in November. Don't wait, buy now.